Cues and lots of important commentary to keep an eye on, but let's kickstart our coverage this morning with the key takeaways from the Federal Reserve's Beige Book. US economic activity seemed to have softened in the past 2 months, with 5 of the Federal Reserve's 12 regions reporting flat or declining activity. Now, economic uncertainty largely attributed to the upcoming election, geopolitical conflict and inflation. The report also showed that in a sign of further cooling in the labour market, several districts saw improvement in labour supply conditions as turnover declined, reducing demand to find new workers as well. The pace of inflation seemed modest, with most areas showing signs of stabilization in input costs as well.
Alright, and let's keep it going with some central bank news coming in. We're already getting some commentary coming in, and top Federal Reserve officials indicate that the US central bank is closer to cutting interest rates given inflation's improved trajectory, and the labour market also looks to be in a better balance. These are the remarks that set the stage for the first reduction in borrowing costs in September. Now, Fed Governor Christopher Waller and New York Fed President John Williams both noted that shortening horizon towards looser monetary policy is going to be something on the focus. Additionally, Richmond Fed President Thomas Barkin said he is very encouraged that the inflation cool-off is broadening. Now, these remarks follow Fed Chair Jerome Powell's optimism over the continued disinflationary trend that began last year, despite a short-lived bump in inflation earlier this year.
Well, it wasn't a good day for the Wall Street for everything but the Dow, but meanwhile, Wall Street's semiconductor index lost more than $500 billion in stock market value in what was its worst session since 2020, after reports said the United States was mulling tighter curbs on exports of advanced semiconductor technology in China. Remarks from Republican presidential nominee Donald Trump saying key production hub Taiwan should pay the United States for its defense-deepened selling in chip stocks. The latest worries for chip investors come after Washington in recent years has adopted a more protective stance for the US semiconductor manufacturing industry as well.
Let's keep it going with Wall Street. Focus on some earnings that came out. And German sportswear brand Adidas soared after the company raised its full-year guidance for the second time this year. Move comes after Adidas reported strong second quarter numbers. Meanwhile, Johnson & Johnson has beat its second quarter profit and revenue estimates, largely driven by strong drug sales. The New Jersey-based drug maker now expects 2024 sales of $89.2 billion versus the prior forecast of $88.7 to $89.1 billion.
Moving on then to some macroeconomic data, then British inflation holds steady at 2% for the month of June, defying forecast for a slight fall. The headline reading came in above analysts' expectations at 1.9%, in line with the previous 2% reading in May as well. Remember, consumers are increasing their spending on leisure activities over the summer months, including on cultural experiences as well as concerts, as you do have high-profile artists, the likes of Taylor Swift, Bruce Springsteen, Pink and Sting touring the country as well. Investors have been eyeing a potential August interest rate cut as headline inflation showed signs of sustained easing. Market expectations of such a trim waned just after the release of the latest print as well.
Alright, let's move on.
If you like this video, then like, share and subscribe to ET Now.